Hello everyone, thank you for joining us at this Your Overseas Home webinar. My name is Christopher Nye, Content Editor at Your Overseas Home and Spain Property Guides, and I'm joined today by John Diking from Chase Buchanan, the wealth management company that we really do recommend you make contact with before buying in Spain. John is in Spain, I'm in deepest Sussex, and across Europe we will be discussing financial considerations such as taxes and pensions when buying in Spain. So it's great to have you all with us today, whether you're here live or catching up on demand. So today's session, maximum 30 minutes, and we hope to have time for Q&A. So please put your questions to John into the questions tab on the right-hand side of your screen. And we'll get through as many as we can, and the rest of the questions will be sent on to John anyway, so you can maybe catch up afterwards. Last thing to say, if you need a reminder of anything discussed today or want to share this with family and friends, a replay will be available on the Your Overseas Home website to watch at your leisure. So, John, it would be great if you could give a quick summary as to who you are and how Chase Buchanan can help our are you listeners or viewers? Let's say viewers, our viewers.
Yeah, Chris, thank you for the introduction. So good afternoon, everybody. I'm John Diking. I'm a private wealth manager for Chase Buchanan, an independent wealth management firm based in Marbella, south of Spain. So I'm going to just move a slide so you can see some information about myself. Hopefully everyone can see this slide. So I'm Swedish, that's where my accent comes from, but I've been down in Spain for 20 years. And for the majority of these years, I've helped expats, mainly UK expats, with the financial planning linked to their move a new lifestyle down here in Spain. So as an expat down in Spain, in the Malaga region, I fully understand all the pitfalls and opportunities that comes with moving offshore. So that's how I can help my clients mainly. Yeah, I mean, Spain is a great place to live. I mean, you got the climate, people come here for obvious reasons, but there are quite a few pitfalls that you need to watch out for from a financial perspective, and that's why it's important to speak to the right person, a professional who can advise you.
Okay, so big picture, what should we be worried about? What are the main tax considerations for someone looking to move to Spain from the UK?
Yeah, so quite a few things to look at, but I'll tell you about the main things. I'm just going to move the slide again. So I think the first thing to point out is that the tax system is totally different, and the tax year is different as well. So whilst in the UK the tax year goes from the 6th of April to the 5th of April, in Spain it's a calendar year, so from the 1st of Jan to the 31st of December. And that means that some transactions that you undertake in the UK, depending on the timing of transactions, you can be taxed for it when you become a Spanish tax resident. So I'll give you some examples about that later on. You also need to bear in mind that you do automatically become a Spanish tax resident normally if you spend at least 183 days in Spain in the calendar year. And also the other rules, if it's not clear if you spent that amount of time, and if the other rules that can imply tax residence, such as if you have an economic interest in Spain, which is your center, and also if your spouse is a Spanish tax resident, you would normally by default be deemed as a Spanish tax resident as well. So if we just move a slide here. So some of the top things to point out when it comes to tax obligations in Spain. So you have something called Modelo 720, which is a declaration of overseas assets. So this is something that was introduced in 2013 in Spain, and it was, I think, the idea was to tackle corruption and people hiding money abroad. But this is a rule that affects anyone that lives in Spain, whether they are Spanish nationals or foreigners who decided to live here. And basically what it means is that any assets that you have abroad worth at least 50,000 euros, and there are different asset classes, so it can be properties, cash, or investments. Then as long as it's 50,000 in any of these asset classes, that triggers the reporting requirement. It's not an extra tax, but you are obliged to report it to Spanish authorities, and you may need to renew it again, depending if the value of those assets go up by at least 20,000 euros since the last report. Another thing to keep in mind is that when you do become a Spanish tax resident, then you would be liable for Spanish tax on your worldwide income. So, and that's from all kinds of sources. So whether you get any, if you get some work income while you live in Spain, or pensions, or if you have investments that produce an income, or property rentals, or any source of income, you'd be liable for tax in Spain. And sometimes foreign income can be taxed at source, which you would then normally be credited for if there's a double tax agreement, such as the one with the UK, and you may be liable to just pay for the difference when you do Spanish tax return. You got the capital gains tax as well, which tends to be between 19 and 26%. So that depends on the amount of capital gain in any given year. And that covers gains on like shares, bonds, collective investments. It does cover property sales. It covers withdrawals on life insurance bonds, for example. So it's very general on investment income. Then you got a wealth tax as well, which covers, obviously, as the name says, wealthy individuals. There are allowances available, and the general allowance is 700,000, and you also have a personal property allowance of 300,000. So a couple moving down to Spain will generally be able to have wealth up to 2 million and not be liable for Spanish wealth tax. You also have inheritance tax, which generally, I mean, the taxes in Spain are different in each region, but one thing to bear in mind generally is that inheritance between spouses and down to children and grandchildren tend to be tax-free or taxed very little. But when there isn't a direct connection, direct family link or very distant family link, then the taxes can be quite harsh. So tax rates can, in the worst cases, for very large inheritances, to friends, for example, with no blood relationship, that can be as high as 88%. So it's really important to plan ahead, and sometimes taxes can be reduced heavily just by restructuring assets. So inheritance tax, one other thing to point out, quite important as well, is that Spanish inheritance tax can only be applicable in two circumstances. So it's quite simple. If it's received by a Spanish resident person, or if it's a Spanish asset. So if there is an inheritance that goes to someone living in the UK, and it's not a Spanish asset, for example, then there's no link to Spain, and there'll be no Spanish tax on such an inheritance. So let me move on to the next slide. And yeah, this slide here, it just talks a bit more about the first point I mentioned about the reporting obligation called Modelo 720. If you have assets abroad, and you can see a few examples here. So if you have overseas bank accounts, and one thing to mention is that if you have a joint account for 50,000, that each person will need to declare it. So you're not just declaring your share, you're declaring the total value balance of any joint asset as of the 31st of December the previous year. You also have to declare all kinds of investments, like you have a few examples here, like shares, bonds, unit trusts, life insurance, etc. And also, properties, and even if it's a timeshare, you have a usufruct. You have the right to use a property certain times of the year that has a value, as long as that value is at least 50,000 euros, you need to do this Modelo 720 report. Yeah, so hopefully that's been pretty clear so far.
Yeah. Okay. So let me feed in a couple of questions. Well, the first question anyway. So this is from someone retiring to Spain, and he wants to know how his British pension is taxed when he moves to Spain.
Yeah. So I think what's important is to bear in mind what we just discussed is that you'll be liable for Spanish tax on any kind of income. So a UK pension received by someone who lives in Spain will be liable for income tax in Spain. And the rate that will be applied, there's a sliding scale. So it really depends on the total overall income, because the income tax in Spain, you lump together like pensions income, any employment income as well in that income bracket. And it's different in each region as well. So we can look at the next slide here to illustrate this. So yeah, this just mentions when it applies, and as I mentioned, state and regional rules can be different. So depending on what region you live in, the tax rates can be a bit different, and the income tax is liable for payment on the 30th of June and the following year. So if you have income in 2022, and if your tax return in Spain 2022, then you need to do tax return by the end of June in 2023. And I think if you look at the next slide here, you can see these are the general income tax rates. When I say general, is that there are some regions in Spain, for example, Andalusia, Catalonia in the north, Canary Islands, just give you a few examples, then they have regional rules, regional rates, but the ones that are not, that don't have specific regional ones, generally the rates will be these ones here. So you can see that the tax rate starts at 19% generally, and it's the same in Andalusia, where I live here in South in Spain. And it can go as high as 47% for anyone that's got incomes of 300,000 euros. There are some personal allowances available. So the general personal allowance, for example, for a retired person here in Spain, depending on the age, but it's roughly 5,500 euros. It goes up a little bit with age. It can be around 6,000 something when someone is over 75. That allowance can be used to offset, some of the liability for income tax. But yeah, generally the income tax rate, as you can see, it can be quite high, and they're not as favorable as the capital gains taxes, which we set on 19 to 26%. So you get lower rates on investment income than you do on work income here in Spain.
Okay. Can I ask about one thing that I know upsets lots of people? When you've already paid 47% tax, and then you get effectively double taxation with inheritance tax. Can you give any advice regarding inheritance tax?
Yeah, absolutely. I'm just going to move some slides to illustrate my points a bit better. And just before we go into that point, this is a slide that shows you the savings tax or capital gains tax here in Spain, which I mentioned earlier. It's 19 to 26%. So you can see the different bands here. And then if we move on to the following slide, we get the wealth tax, which we discussed already. There are some allowances, so a couple can have generally 2 million in wealth and not liable for wealth tax. But if someone is really wealthy, and if they got significant assets, then for assets over 10 million, 10.7 million, then the wealth tax can be around 3.5%. On the state level, in Andalusia, the maximum is 2.5%. But it's a sliding scale, so it's really steep over 10.7 million, but for lower amounts of wealth, then it can be much less. And then if we move on to inheritance tax, which is linked to your question, Chris. So a few key points about inheritance tax. And here in Spain, we tend to lump together inheritance tax and gift tax because they're treated almost in exactly the same way. So the first thing to point out is it's totally different to the UK, because in the UK, when you talk about inheritance, you talk about the estate. But here in Spain, each person, each beneficiary that receives inheritance has got their own allowances. So it's not, the allowance isn't per the estate, it's per person that benefits. So for example, here in Andalusia, in the south of Spain, it's the biggest region here, then if you are a spouse or a child or grandchild, then you can receive up to 1 million euros per person, tax-free. So it's really generous, and there are similar allowances for very close family members in other regions of Spain. So yeah, so it's really determined by the kinship groups. The rate of tax you're paying. If there is a liability, generally the more distant that person is, from a family perspective, the higher are the tax rates. And if you don't have a family and you pass on all your wealth to a friend, then the tax rates can be really high for this. And for example, someone that doesn't have any children of their own, but have stepchildren, they should really have someone that helps them with the financial planning in this area, because stepchildren will be taxed really heavily in most regions in Spain, including Andalusia. However, there are ways to restructure assets to avoid hefty tax bills on stepchildren.
Okay, that's interesting.
Answer your question, Chris?
It does, yes, it does. Well,
sorry, I have one slide actually before we move on. This slide here shows the general inheritance tax and gift tax rates. It doesn't look too bad. If you look at this slide, it goes up to 26%, and you're going to think, well, John just said 88%. What's this about? But this is not the true picture. So there are also multipliers that will apply on this. And I think this slide, actually, we need to update slightly. I think it goes up to around 34% in the worst case. And then you can see that depending on the group, like the relatives, like group 1 is really close family, and then group 4 is friends and distant family. You multiply the rates, like in the worst case here, by 1.9 on this scale. So, it can be really, really high for large amounts going to a distant relative, for example. Yeah, sorry, Chris, I interrupted you. You were going to ask me another question.
Yes. Okay. Now, well, just to remind viewers that we will send you a recording of this, so you can watch it and pause at the relevant part and take down any notes that you need to. So, a question from Francis. I am interested in finding out tax implications regarding my UK state pension and my monthly drawdown pension payment. Specifically, she would like to know what the Spanish tax allowance would be before paying tax against this income.
Right. So it's difficult to answer this question without having some information. So it will depend on the region where she's based. Generally the allowance, personal general allowance, is 5,500 euros, and the pensions will be taxed as income. So it will be, she may have other sources of income that will be added, and then depending on the total income, then you deduct personal allowance. You need to see what kind of tax rate you'll be paying. Someone that gets income of around 30,000 euros here in Andalusia, after using the personal allowance, the tax rate will be in the region of 20% on that income, to give an example.
Okay. Now we've had one from Haley who is buying a holiday home in Spain. She would like to know, she says, would I have to pay UK tax and Spanish tax on the same income if I was to rent it out?
Yeah, it's a really good point. So if you have a holiday home here, then you'll be liable for Spanish tax on the income, even if let me just think, even if you're not a resident here, so you'd be liable for that. And then the Spanish tax that you pay, you can then offset in the UK when you do your UK tax return, because I understand that you would still be in the UK, you would just have a holiday home here in Spain. So you're not going to pay the same tax twice. There is a double tax agreement in place, but it's the same thing, for the opposite situation. So if someone comes down here to live here, but they still keep a UK property that they want to let out, then they'd be liable for UK tax on that income. They need to include the property income in the Spanish tax return, and then in the tax return, their accountant, normally in Spain, you have an accountant or a gestoria, which is an admin office. They normally help you with your Spanish reporting, and it normally can be quite cost efficient to do so. They are the experts, and they make sure we get all the allowances, etc., that you don't need to worry about that. But they would then declare your UK property income and make sure that you get credit for the UK tax paid at source, and you may have to just pay a difference in Spain. The property income in Spain will be taxed at 19 or 21% normally. It normally doesn't go up to 23, 26% for those kind of incomes. And the property, the income on a property in the UK for rentals, it obviously depends if you're a basic rate taxpayer, higher rate taxpayer, or additional taxpayer.
Okay, great. Okay, we've had a question from Steve, who says, will I still get my increase in UK pension each year if I'm resident in Spain?
That's a good question. And I can imagine this question is probably like Brexit related, perhaps, I'm not sure. I mean, I think prior to Brexit, they were talking about that if you moved to countries like outside the European Union, then there was a risk that you wouldn't get the enhancement on a yearly basis, to offset the inflation. I haven't heard of anything about that you should lose this because you moved to Spain in spite of Brexit. But to be honest, I'm not fully up to date with this area, so it's something that this may apply in the future. I'm not sure.
I think the issue was that if you retired to Spain prior to Brexit, then you would get the increases in state pension, the so-called the triple lock, whereas those people who retired to a place like Australia weren't getting it, much to their fury. And people are worried that post Brexit they wouldn't get it when they moved to Spain, that the rule would change. As I understand it, Steve, they are guaranteeing that you'll still get the pension increase for the time being for several years. So
yeah, that's my understanding. I mean, one place that I tend to look at when I get questions like that, because I normally don't. There are areas like this where I need to just consult someone else or look it up online, and I like to look it up on UK.gov website, which is a lot of information for people that move abroad. And it's really good. It's up to date. So it's always worth looking at because these things change over time.
Okay, we've had a question from David, who's asked, what are the rules for buying an investment property which is rented out?
Right, so I'm assuming that he would be a Spanish tax resident and rented out here while he is a resident here. So the rules are, well, from a tax perspective, it's quite simple. So you would tax on his investment. Again, the tax rates are 19 to 26%. 19 to 26%, depending on the gain. However, if it's a long-term let and it's for residential use, then you can offset. The 60% of the rental income can be exempt in those cases. Then there are rules you need to think about in terms of, like in the last few years, Spain has made it more difficult to let out like holiday homes. So there needs to be various certificates in place. You need to have like energy certificate, for example, things like that. That previously anyone could just rent out their home and there was no checks and no licenses. But become really tight now. So it's worth just speaking with a maybe property agent and just find out exactly what needs to be in place to let out your property in Spain without having any problems, and then get a gestoria, an admin office to help you declare that properly in Spain as a rental income.
Okay. David actually says he will not be a resident in Spain, but I guess in that case it's just the same as your answer for the holiday home.
Same as the previous question, exactly. So there will be tax in Spain, which they would get credit for in the UK tax return, because there is a double tax agreement, so you don't have to pay the same tax twice.
Okay. David has asked, it's back to inheritance tax, and just for so is there inheritance tax due on property for an unmarried couple where one dies but both names are on the title deeds?
It's a good question. So I'm assuming it's a property in Spain we talk about, and I'm assuming that
Yes.
that they will be resident in Spain as well. So if they're unmarried on first death, this can be a big problem, because I did mention that there are generous allowances between spouses and to very close family members. I mean, going down the line in generations to children, grandchildren. But if you're not married, or if you're not in a civil partnership, which in Spain is called pareja de hecho, then you don't benefit from an allowance. So from a Spanish taxman's perspective, on first death, the inheritance will go to a total stranger, and they'll be taxed at really high rates, all parts of Spain. So that's something to really watch out for. It's not an efficient way of passing assets if you're not married. It's something that you can discuss with a financial advisor. There are options around it. It can be restructured so that you can pass on other assets to each other, or you may decide to marry at some point, or become civil partners, and that would just, resolve that problem.
Okay. Right. Jolanta is asking, what property is counted as a new property, and when and what percentage of VAT would you need to pay on that?
Right. I think that there was a recent change linked to buying property, where property purchasers had a purchase tax of around 7-8%, and I think the latest news were that it got harmonized to 7%. I'm not sure if that applies only to second-hand, or if that includes new properties. So to be honest, I don't know exactly. It's probably 7%, but it's something that the property agent that you deal with to purchase a property will be able to give you an exact answer to.
Okay, brilliant. So finally, we are reaching the end. To wrap up, could you summarize why people should seek professional financial advice when they move to Spain, and when's the best point in time to do that?
Yeah, absolutely. And I just want to cover one thing I forgot to cover before I just do that, to mention Spanish wills as well. That when you come down to Spain, you should set up a Spanish will, especially once you bought a Spanish property. And it's important to bear in mind that in Spain, there's something called forced heirship in place. I'm just going to go back a few slides just to talk about that, and something to bear in mind, because by default, if you pass away in Spain, then 2/3 of your assets have to go to your children, whether you have a good relationship with them or not, whether that's what you want or not. That's just what's going to happen. So as a UK national, and in spite of Brexit, it hasn't changed, you can opt for the country of your nationality to apply for distribution of assets when you pass away. So basically it means that if you go to notary, set up the will, tell them that you want your UK nationality laws to apply, and that means you can in your will have any beneficiary. There's no forced hardship in such case, so that will be respected. That's a European rule that came in force a few years ago. So if we move on to the next slide to answer your question. So I think why you need to seek advice is, I think there are quite a few pitfalls when you move to Spain. You got to be careful. Finances, it's an important area. You got to spend some time and make sure you get the right advice. So just to wrap up things which you, for example, in the UK, you got tax-free allowances such as ISA, so you have national saves and investments products, and they're not, whilst they are tax-free in the UK, you can grow your assets in those ways in the UK. There's a tax resident there. As soon as you become a Spanish tax resident, it's not tax-free. So you just get to bear that in mind, and it means that you gotta take actions on some of your assets whilst you are still in the UK. You should speak to an advisor that knows about Spanish regulations and tax laws, so that you can then take relevant actions before you move down, before it's too late. I mean, you also have, for example, if you have a pension plan, you can take out, if it's a private pension in the UK, you can take 25% as a tax-free lump sum. Now, that is not available in Spain, so if you forgot to do that before you move down here and you want to draw a lump sum from a pension, it's going to be added to your income tax and marginal rates, which on a lump sum can go really high. We talk about 30-40% tax on a lump sum, so you don't want to do that. So that's something to just look at before you move down and speak to the relevant advisor about it. One thing to mention as well, trust is something that people have in the UK. It's not too unusual that people have trust that they've set up as a settler or they benefit from a trust. But here in Spain, they don't really understand trust. It's something very Anglo-Saxon, and they don't recognize it. So it's something to bear in mind. In Spain, they look through trust, which means that if you are the settler for trust, if you're the one that put your assets into the trust, that they say these assets are still yours. Like if you never created that trust, it's still your asset, and you still need to declare it as your asset. Even when you report assets abroad, if it's a trust in an offshore place, for example, that's your asset. You got to declare it, and the income generated by the investments in the trust, they will be taxed as your personal income. Key point, I think this is something that I think will affect most people when they plan to move down, is that they have their main UK home that they want to sell, and they want to use the proceeds of that home sale to buy in Spain. Because it's cheaper down here in Spain, they'll have a difference, and that difference is going to help them to have a nice retirement. So one key thing to consider before you move down is that whilst the sale is tax-free in Spain because it's your main residence, it's not tax-free in Spain. So you got to be really, really careful. So if you sell, for example, let's say in January, if you would have sold the property in January this year, and you want to move down to Spain right now, it's the 5th of May today, and you spend the rest of the year here in Spain. From a Spanish perspective, you became a tax resident here on the 1st of January. So you'll be liable for tax on any transactions from the 1st of January, including your UK property sales. So any profit you made on it, you'll be liable for tax in Spain. And the tax can be quite high because most people, they would have had the properties for a long time. The UK property values have gone up a lot, and the tax bill can be really high. So you can avoid it. And one way to avoid it is that you spend less than 183 days in Spain before you move down in the tax year. So if you sold in January this year, don't move down straight away. Move down after sometime after July, August, and make sure that you spend less than 183 days here. Then you haven't become a tax resident. You then become a tax resident on the 1st of January next year, and that means you're not going to be hammered by Spanish tax on that property sale. So that's just an example of things that people can get wrong and be taxed heavily just because they didn't plan things ahead. They didn't speak to a professional advisor before they moved down. And this is why I can come in and I can help people with all these things. So what I'm offering is free reviews where we can discuss your financial planning, your current situation before you move down. And I'll give you advice on what you should look at, avoid the pitfalls, and then we can set up tax efficient investments here in Spain, which are fully compliant with Spanish regulations, Spanish authorized, so we can offer investments that give you a nice retirement income in Spain, or to grow your assets in Spain. And we would also make sure that the wealth is structured to minimize Spanish wealth tax and make sure that your family doesn't get hammered by inheritance tax. And we'd also make sure that those assets can be passed as smoothly as possible to your family. One thing I forgot to mention is that when you pass away in Spain, then any Spanish assets are frozen until you've done the Spanish probate process. And this can be quite complex if you have a family in the UK inheriting Spanish assets. They need to go through a lot of hassle and engage Spanish lawyers, and the assets are frozen for months. So there are ways to set up financial structures, which I can help with, that gives your family assets just in a few weeks' time, very quickly, so that they can, have money available without all the hassle for Spanish probate. That's something that we can set up and plan for.
Okay, fantastic. Well, thanks for really, really detailed, useful advice, and really professionally delivered. So thank you very much for that. Like I say, you will be getting, viewers will be getting a recording, and we'll also do a transcript as well. So watch out on the Your Overseas Home website. We'll do a transcript for you to read as well. So thank you, John, for your insightful tips and advice. We do strongly recommend that you get in touch with Chase Buchanan to discuss your requirements in detail. And another one of our sponsors, Smart Currency Exchange, as well, because with the pound sliding 1.5% today, but certainly on the tax and pensions, Chase Buchanan are the people to speak to. Thank you for watching this session, and well, all the best with your move to Spain. Thank you very much.
Thanks, everyone. Do look forward to hear from you. If you have any questions, just send me an email, give us a call, and I'll help you out. You're very welcome.
Fantastic. Thanks very much.
Thank you. Bye. Bye-bye.
Bye.